This episode is sponsored by Sir Lancelot LLC, also known as SLA Capital, which, if you didn't know, is Dan and I's private lending company. So yes, we are sponsoring our own show, but what you going to do about it? It is our private lending company that offers hard money and DSCR loans to real estate investors of all types. So you can be a new investor, an experienced investor. You can be buying flips. You can be buying rentals, whatever. We can do everything. And not only that, but the rates that we offer are just as competitive, if not cheaper, than pretty much every other company out there. So whatever big company you've been working with, bring us their term sheets and I guarantee you that we can probably beat it. We have the same connections they do. We just don't have all the overhead and middlemen. So if you want to come and check us out, go to slacapital.com/keys and I will know that you came from the show. And by seeing that you came from here, when you get to closing, you will save $500 on your first loan with us. So slacapital.com/keys, we would love to fund your next deal. So those markets are actually up 10% year over year on value, which is crazy. In a country where pretty much everything else is dropping. Congrats, Dylan. You're officially a Collecting Keys host now.
You can put me right in the middle too, man. I appreciate that.
I know. Well, so here's the thing. So if you guys go to collectingkeys.com, you can see Dylan's on there now. It took me embarrassingly long to figure out how to make that image of you in the circle. Because when it was built out...
Was it just a crop feature?
Well, so the problem is when it was built out before, we had a designer on staff who no longer works for us. And so I had to figure out how to do it myself. And it was... The hard part is the piece at the bottom where like it fades with like the light blue, so it looked the same. And
you should have told me to take a picture in a scale or Collecting Keys shirt, like you and Dan had.
I know. Well, you still can. I'll update it, but just
now that you know how.
Yeah. What's going on, guys? Welcome to the Collecting Keys Real Estate Investing Podcast. You are joined by me, Mike DeHaan, and Dylan Cook over in Cincinnati today. Dan is out. He is at a conference in Banff, living the good life up there in look like a beautiful area from his photos. So he is traveling back, so he will be missing the show today. So sorry, no off-color commentary by Dan today. We'll keep things kosher for the kids.
For the viewership, if you had to look it up like I did, Banff is like the west side of Canada.
You didn't know where Banff was?
No.
That's so funny.
Because it's closer to you guys than it would be for me.
Oh, yeah. I mean, it's like a 7-hour drive from where we live. It's not far.
Yeah, it'd be like probably a day and a half drive.
It's so funny, though, because like there's obviously regional stuff that you always sort of learn like that. So I grew up in Montana, right? In Bozeman, Montana, which people come from all over the world and say, this is one of the most beautiful places I've ever seen. Because I grew up with that. I like go there and I'm like, yeah, whatever. Like, I think of like going to high school there and like all these different things. And so it's like, yeah, I can recognize it's a beautiful place. It just doesn't like touch my soul like it does for people that, are Yellowstone fans and go visit like Big Sky Country. And so then
you'd rather
places like
Banff country.
Well, I tend to find more beauty in that kind of stuff because it's so different. But then people go to like Banff, which is a very, very pretty area. And it's funny. I know other people that are at this conference with Dan, and there's people that are coming from like some of these places in like the Midwest or the South. I think it's just flat. And they're just like mind is blown by these mountains. Mm-hmm. And I've had this realization over the years that growing up like somewhere in Montana is so cool because of like how the childhood they got to have, and you got to grow up skiing and doing all this outdoor stuff. But as an adult, it kind of sucks because your bar is so high.
Sure.
For so many things. And like, it's very challenging. Like, it's hard to be impressed by a lot of stuff just because it's sort of like commoditized to me. And
when I first went to Breckenridge in Colorado, and I was probably 20 years old, and I did like the snowmobile ride or like a dog sledding thing, I was like, this is a different world to me.
Oh, for sure.
I'm used to farmland pretty much,
Yeah. Yeah, it's fascinating, like that, how much your set point can change, and like, I think that as you travel and things more too, that sort of happens again and again and again throughout your life. So like for me now at this point, I've traveled all throughout Africa, parts of like Arabic countries, things like that. I've gone all across Asia to the point that now, like when I go to Europe, which is like a big deal for a lot of people who go to Europe, It's making me sound so entitled. I go to Europe and I'm like, it's fun. Like, it's cool to like sort of see sights and stuff, but it's not like that awe-inspiring just because I've seen parts of the world that are so drastically different that has changed my perspective on like human nature. And then if I go to like Spain, I'm like, this might as well be Southern California, like honestly.
Yeah. I mean, Well, and what's crazy, Mike, is like, yes, you're doing this at a big level. Like, you know, there's not many places in the world that can be awe inspiring anymore. But this goes back to like the day-to-day life stuff. Whereas like growing up, if you had a pizza every Friday with the family, like you looked forward to something like that. Like, you know, but now that, you know, I could order a pizza every day if I wanted to and I didn't care about my health, right? Like, is it like, I don't know, things like that you can, if you get too much of it, no matter what it is, like the euphoria kind of fades away.
For sure. And I think the same thing applies like financially too, right?
Yep.
Like your expectation on quality or what's like good or what's like, you know, decent level experiences change. You know, there's always going to be haters that kind of hate everything. But also too, I would say your standards can change very, very quickly as you make money. And I think that's why people that have money tend to, you know, be labeled as like snobby or aloof or whatever, is because their now floor is just like above other people's kind of like expectations and ceilings. And so it creates that gap.
I mean, I'm more willing to pay for convenience now than 100%. Anything else, like first class flights, or I don't like, let's say we went to Disney World as a family. Like I'm paying for a fucking fast pass. Sorry.
Absolutely.
Like
not even like a question. Like I'm not going to wait in line if I don't have to.
No, exactly.
You know?
So
but anyways, so welcome to the Entitled White Dude Show. But yeah, Banff is a cool spot though. If you ever have a chance to make it out there though, it is very beautiful. That I will say, out of all of the travels that I have done, the Pacific Northwest, Banff fits into that, like that region, but like Western Canada to like Western Washington is up there with one of the most beautiful places in the world. Like it's absolutely stunning to go up there and see, like, especially the volcanoes and how dramatic the mountains and stuff are. Like it's super, super cool.
Well, unfortunately, I don't even us being entitled white guys. I don't think we can afford a place in Banff because they're like millions and millions and millions of dollars.
No way.
Like people think it's bad in the U.S. Like the median price income in the Canada is like 10 times worse than it is in the United States.
It's crazy. Vancouver is one of the most overpriced cities in the world now because, well, what they didn't crack down on several years ago was the overseas investment. And so what you had happening is you had all these Chinese people that were coming in and buying properties there that they were allowing to sit vacant and were basically losing money because they were trying to shelter their money from the manipulation of currency that was going on in China. And so you have all these things that are so unbelievably overpriced in Canada.
That no one lives in.
That nobody lives in. I know. We went to this, my wife and I, she's really into tattoos, and there was this tattoo artist that she wanted to see in Vancouver. So we went up there last December. And we just got on Airbnb, like this little tiny, it was like a condo apartment thing, 1 bedroom, 1 bath. I think it's like 500 square feet, or as they would say up there, 200 square meters, right? I don't know if that conversion's right, but it's really small. And it was like directly out the window was an exit ramp from the freeway. It was an awesome location. Like you could walk to all the restaurants and stuff, but no view. You saw like the freeway at like eye level. So like if you were in the living room standing, you could like wave at people that were waiting to get off the freeway. You know, it's like super, super small, wasn't overly fancy, but we looked it up and the dude that we had rented that from an Airbnb had bought it for $1.8 million several years earlier.
It's insane.
Unbelievable.
A couple $1,000 per square foot.
Totally, dude.
On a sale price.
Yeah. It was like the size of my bedroom. It was so small. And that's like a cheap option. You know, then we're looking at some other stuff, and like if you wanted an actual like 3-bedroom thing, they were like $5 million. Yep.
And the other half of this is like the geopolitical side, where you know they have the Chinese people trying to buy like farmland or like other that might be, you know, might not be in the strategic interest, you know, right? And so this goes in the whole like property rights discussion. Like, do you disallow that? Do you don't? But I mean, that's probably a topic for another day.
If we want to go down that rabbit hole, I'm curious for somebody that this isn't directly next to you. I'm sure you heard about the Qatari Air Force Base that they're allowing them to build in central Idaho. That is such, like, I don't know the reason for this. Like, I've tried to find it. I can't seem to find one other than the fact that they had some like rich dudes handshake agreement. But it's wild for several reasons. A, because it is a completely foreign Air Force base, I guess, that they're building on American soil from a Middle Eastern country, which unless you grew up under a rock, you knew that the U.S. and Middle Eastern countries don't typically have the best relationships. And it's also in fucking Idaho, which is like the most, I would say, like white, not accepting state that probably exists right now, honestly. even compared to some of the southern states that are kind of known for having issues with that. And they're just going to throw open Air Force Base out there. And I don't know why.
It's so far above my pay grade. And my default answer is that the government is usually pretty incompetent. But this is just like a glaring, like, what the hell kind of a thing.
I know.
I don't know. I don't have a better explanation for you.
Yeah.
Or theory.
My only sort of thought is where they're doing it is kind of near the mountains that are down there. And I'm like, I don't know, maybe there's like a Qatari prince that likes to go skiing in McCall for some reason. But like he doesn't like Jackson Hole, which is a way better mountain, but he wants to go there. So they're setting that up so he can fly over in his, private 777.
I know money talks, but I mean, when you put national security over financial gain.
God damn. I don't know. Anyways, I want to talk about some of these different regions though, and how stuff's sort of panning out on just like the real estate investment realm. So I've been using, first off, let's talk about AI, because I've been using ChatGPT to just like figure out some of these headlines and stuff to talk about. And it's funny. And so this one, it came up with a bunch of like regional comparisons for how markets are doing across different parts of the country. And then after it sort of spun up all these little notes for me, it said like, hey, I can build out a map/slideshow visual that you could use for a reel to show the metro comparisons visually. It's like, do you want me to mock that up? And I said, absolutely. And so what it did is it proceeded to spin up this map, which if somebody, and my thought is like with how sort of the micro entrepreneurs work is they're going to have these prompts, this GPT that they built, quote unquote. They're going to have a Filipino or like an overseas person run it, that's then just going to go and just download things and post them on social media and just be like, content, I'm a content creator. So anyway, it spit up this map that is 100% incorrect in every way. So basically it has Syracuse is in Texas. It has Scranton in New York.
Oh boy.
It has 2 Miamis with different stats. And then basically it has all of the colors wrong. The whole graph is wrong. So basically it says that Florida is a good market. Like Montana, Washington aren't good. And then
I would literally just flip-flop this whole thing.
The whole thing. It's just like backwards. And I was like, what is it talking about? And then I was like, this thing is wrong. Can we do anything different? Can we just like fix it? And it just said, well, what do you need me to correct? And I was like, okay, so it actually has no idea what's going on. But yeah, the point being is that, that content and information is really hard to trust right now. It's only going to get worse as more and more stuff like this becomes the norm, right? And it's like how over the past, decade or whatever, influencers have been able to come in, and if they speak very charismatically, they can just like say shit and people will believe it. Now they can back that up with quote unquote infographics and facts, right, that are just completely bullshit, and people will buy it, and the problem is now you don't even have to have like an understanding of like a graphics tool to put it together. You could just have AI do it for you. But even worse still is that if you don't check, you won't even know that it's wrong.
Yeah.
Right.
I think it's harder now than ever to not know or what to believe that you see anything online. And that's especially true for, to be honest, like boomer people who like will believe anything they see online anyway.
Absolutely.
I mean, if I'm looking at this from a point of how am I going to use any type of AI for my business, I'm probably not going to rely on it for data like that, but it's still a good, synthesizer of like information. Like, for example, some of the information that it put out there in your notes looks accurate, but the graph is severely wrong.
Correct. Yeah.
Like,
and I think the key is it's a great compiler, right?
Yeah, because like curation of information.
Yeah. I actually saw, it was a Reddit post, which is always questionable, but here's one of the things that's ironic about that is that Reddit is one of the largest sources for ChatGPT to gather information from, which is funny. Because
a scary thought in and of itself.
Yeah, because I've been a Redditor for a long time, and one of the jokes about Reddit is that you can seem like there's so much information on there, but the more that you personally know about a topic, the more you realize the people on Reddit don't know anything about it, right? And it was like an AI article, and this person was basically saying that they're a software engineer that works with AI, and people think that it's basically generating content, but what it actually is, it's predictive. Right. And so it has like the history of everything on the internet. And what it does is it takes prompts that it has received from you and other people, and it tries to predict an answer that will satisfy what you're asking for, not an answer that is correct, right? And so what it does, it tries to pick up on your tone and what you kind of want to hear, and it will give you something that it thinks will be acceptable to you.
I saw something like this on X where it's basically like, if I just prompt the AI enough, it'll give me the answer I'm looking for.
Correct.
Like, it's almost like it's like recency or like your own bias being enforced.
Yeah. So like there was a whole recent South Park episode about that, where Randy Marsh is trying to pivot his weed farm, and he's using AI to tell him how to do it. And basically every time he asks it a question, he says, "Do you think this is a good idea?" He just goes, "Absolutely. This is how we do it." And it eventually it evolves to where they're like an AI integration, like weed platform, like for weed farmers. And the whole joke is that everyone basically is leaving to become an AI integrator for whatever thing they're in. But you're completely right, though, is that's what it'll do. It becomes like a self-fulfilling prophecy, whereas it's not asimilar from Google, where if you like prompt it to give you an answer a certain way, you will find it. Like if I go on Google and I were to type in, reasons why, liberals are causing the world to die. Like you could do that and you'll find a bunch of stuff about it. You can swap liberals with MAGA, conservatives, whatever. You will get confirmation of links that will completely tell you what you want to hear. And AI is doing the same thing. But the problem is right now we currently just completely trust AI because it does it in a way where it feels I think like believable.
I think one of the differentiators you have to put out there is a lot of, I think, what the quote unquote AI that people interact with today are the LLMs, the Groks, ChatGPTs. But there are other AI systems being built that aren't large language models. Like I've heard of things where you can basically like build your own code, like a no code coder, and like build your own websites and like, I don't know, do stuff that I can't even really fathom, or like maybe financial models or something like that. Right. Whereas that's not the same thing as using AI for LLM that I think which most people, 90% of people, that is what they think of when they think of AI.
Well, even then, right, if you do use it for code. So I'm building out like our the back end for our lending business. And just because I hate all the canned products, I'm linking a bunch of stuff together with APIs because I'm a fucking dork and that's what I do.
You are a dork.
Yeah, I am for sure. And so, but writing APIs takes a long time. So I've been using AI to do it. And it's awesome because what it does is it spits out this, all the code that you need. Everything's like freaking spaced out. It looks so good. You copy and paste it. Never works.
Really?
Literally never works. Ever.
Okay. That's good to know.
And like there will be, and the stuff that's usually messed up is like the easy stuff, which is funny. Like it won't have like picked up on like the right key structure, right? Or it'll like the naming convention of it will just like have ignored. But all the kind of nitpicky stuff with code, like your comma placement and all those sort of things, that'll all be great.
Interesting.
So that helps, but you have to be able to debug it. Otherwise it's completely pointless.
And I guess the point is like, I think the thought process is this is going to get better over time, right? Like hopefully, eventually it should just be plug and play. And I was actually listening to another podcast where everyone thinks like, I don't know, like ChatGPT or Grok are going to be like these all-encompassing things, where it might be more like Grok will be strictly better, like be the best AI at code. And another AI might be the best AI at building websites, or another AI might be best at financial modeling. It's not going to be an all-in-one like intuitive thing.
Sure. But then the problem will be when that AI is getting used for the same kind of things over and over and over and over again.
Right.
And technically, if it is this all-encompassing model that is collecting information from everybody, people that feed it worse and worse and worse and worse and worse information, won't that inherently make it dumber? I don't know.
Yes. Yeah. Let's tie this back to the real estate part. Is I actually remember there's two members in Scale who were thinking, they are in California. They're thinking about investing in Cincinnati. They asked an AI, what are the best zip codes to invest in Cincinnati? And they texted me and said, hey, like, do you agree with this? And literally I would not have picked any worse zip codes. like I would not, like, I was like, no way in hell would any of those zip codes work, or like very, very frequently. So one, it shows like it didn't know, but two, to the real estate piece is like, I think it's so important now to know your local market to the street, not even the zip code, like to like literally block by block. If you're going to want to do this off market business?
Well, I think the challenge would be there too, right? Is if they said simply, what are the best zip codes? It doesn't know what best means. You know, you'd have to say that the prompt
matters, right?
The prompt matters a lot, and you need to be a lot more specific. So if you were to say, I'm looking for markets to invest in real estate in Cincinnati, where I want to be able to buy properties that are going to have the least risk of needing, you know, additional work, that are going to be able to be bought at a discount because there's a higher population of distressed sellers, that is, you know, has a decent crime rate, so I don't have to worry about issues with my tenants, whatever, right? And like actually outline it that way. And it will probably still tell you something wrong, but at least you'll feel like you fed it the right information.
Yeah. Well, I mean, I asked ChatGPT, like when you were redoing the website for collecting keys, I prompted it with write my own biography, like basically what you know, and it actually did a pretty good job.
It did a pretty good job, actually, yeah. You know, but stuff like that's like so simple and so low consequence.
Yes.
True. You know, I think the problem is when people are, you know, using it to either project information to others, like if they have an authority, that's a problem, or if they're using it to make like larger decisions about themselves or about their investments, is where it gets a little bit dicey.
Yeah, you know, and I don't think anything beats talking to someone who's doing the business where you want to do business at.
Of course.
Like, that's always going to be the go-to. But like the podcast I just listened to too, Mike, is like, he's the Reventure app guy. I forget his name, but if you look it up, he's got a pretty good UI on what markets are hot, what are not. Yeah. And he was basically saying the same thing, where they're looking at the new credit reporting that we talked about last week, how that a lot of the credit reports, especially for the younger population, are going down because of missed student loan payments. And this is the government's response, like the rent rates and stuff, to hopefully increase that, to increase lending. But long story short is like the DFWs, the Jacksons, like Florida's, a lot of this stuff is like, if you're in a market with rising inventory, it's great to be a buyer. If you're in a market with, there's still markets with very little inventory, and it's so good to be a seller. So it's just so hyper local. It's hard to give a broad definition.
Yeah. And that's where things like ChatGPT can be helpful, is they can like help you actually like gather that information and get it into a singular place. And so like for the purpose of this show, I wanted to talk about some kind of these different markets and what things are looking like. And so this is what I kind of ran through here. And the general gist of what we're seeing overall, and the thing I always like about it too, is it actually does link it to like Market Watch and Business and Housing Wire and all those sort of things. So you can see where these headlines come from. And so the markets that seem to be doing the best right now are some of the Rust Belt markets, right? So kind of like, are you part of the Rust Belt, Cincinnati? I know
I think we're just more Midwest. Rust Belt's more south.
More south. Well, it goes south up through
like Pittsburgh, like Pennsylvania. Yeah. Like I don't think we're considered that, but we're close.
Yeah. Because they said Syracuse, New York was like one of the top, like the most northern parts of the Rust Belt. And so those markets are actually up 10% year over year on value, which is crazy in a market where, in a country where pretty much everything else is dropping. And then all of the Sun Belt sort of old people markets, Arizona, Florida, right? Those are all in the shitter. Everyone knows that, with Miami actually being the worst market with currently 10 months of supply. Whereas the northeastern markets are sitting under 3 months. And so, you know, it's funny. I wonder how much of that is, I would say, like the long-term fallout of COVID, both politically and socially, with people retiring and just basically being like, well, COVID is my excuse to exit my career and retire and move out. Plus the fact that we've had unprecedented securities growth and 401k growth over the last 5 years. So people being comfortable pulling the trigger. And then also the migration of people from like blue states or whatever that happened for a year and a half.
Well, I think there's even some reversal of that with people having to come back to office.
I think so. Actually, yeah, that's probably true.
And so there are more. The one thing I liked in that podcast episode that goes along with this is you're basically starting to get to some points of pre-pandemic levels of inventory in some of these markets, which I think that is the only thing that you can compare it to, because COVID had so much intervention that I don't think you can use that as a normal market timing at all.
Totally. Well, I think the fact that so many markets grew as well. I mean, there are people that affordability is more important to them than lifestyle.
Yep.
Right. And so you're also seeing a huge movement of people moving towards those super affordable markets, even if it means leaving their, you know,
I know someone that's leaving Nashville, Tennessee to go to St. Louis, Missouri just for cost of living.
Isn't that crazy? Yeah. I know somebody that moved from Spokane to Iowa. I was like, what is in Iowa, dude? Like that is a state that I have never thought about, except for when the Hawkeyes have like a decent team, once every 6 years in March Madness.
I think I named like Des Moines, Iowa, and that's about it.
Right. Was there any other I don't even know. There's probably a Springfield there.
Probably.
But there people are moving that way. And so you're starting to see places like some of these smaller metros in Indiana, some of these more rural spots that are having a massive decrease in days on market. Just because there's actually a population of people buying houses there now, and I see lots of jokes about this too on Instagram. There's a lot of like, I just be what I get targeted with, but like millennial doomer content, I would call it, where like talk about how impossible their life is now because they are victims, whatever. And I see a lot of stuff that's along the lines of like, this is what a house will buy you in, LA versus like, here's what a house will buy you in not Montgomery, Alabama, which is actually a pretty popular place, in whatever area in the South. And like the one in the South will be like $100,000, and it's like a 6-bedroom, 8-bath, like old like slave plantation, dude, that has like the white pillars and stuff.
Yep.
And like the commentary will always be like, oh yeah, I think it's worth giving my kids the worst possible education for this.
Everyone has their own trade-offs, right?
Yeah.
Do you want the big ass house that you can post on Instagram, but your kids are dumb, or
hey, I'm sure there's some smart people that come out of there. They just go to private school, like because they have money, because they live in the fancy $100,000 house, not the $20,000 one.
Right, but like that same podcast too, they talked about. We talk a lot on the show about like mortgage rates, right? And how everyone that the COVID had, like, anywhere from the percentage of mortgages that were under 4% were at an all-time high. Well, now these mortgages that are 6% or higher are starting to creep back up, and that's starting to get to a closer and closer ratio, just indicating that like people are always like, why would people move if they have such low interest rates? Sometimes they have to. Like things just happen, right? Yeah. So like it's not like this is going to be set in place forever, and eventually there will be more mortgages in the 6+ range or 5+ range than there will be in the 4- range.
Yeah,
and but that's still going to be local dependent on where you're at.
Yeah. So here's a question for you on that. Let's say that you are someone that has a decent income, but you're not a full-time real estate professional, right? So like, let's say that you work for Cisco doing outside sales, you make $250,000 a year, and you want to be a real estate person, and you can basically buy whatever, but you have like a decent buying power. Does it make more sense for that person to buy real estate in like a market that I would say has a high quality of life potential, high growth potential? Think places like San Diego, right? Places like Seattle, places like Austin, right? Where there's growth that has happened there. People generally like living there. They have a good culture. But the cash flow is going to be trash. Or does it make sense to go and buy things in whatever town, Ohio, Indiana, Illinois, that maybe has like a population of 100,000. There's not a lot going on there, but you can buy things on like a 1.5-2% roll. What do you think? Like if that person, if their goal is to be a real estate investor, I'm not saying about cash flow. I'm just talking about like they want to have a portion of their investments in real estate. What do you think is a better bet?
From a long-term wealth perspective answer, probably the higher quality of life places, the one that with a more expensive market. And I say that because of just the equity spread you're going to get over time versus the other markets are going to trump probably anything else.
Yeah, I would tend to agree. But it's funny because I think most of those people, they would probably think the other way around, because they're going to look at the
cash on cash or whatever.
The cash on cash.
Yeah.
But if you look at like a levered return, or even an unlevered return, honestly, on like a property in San Diego that you buy for $800,000, here's the thing about places like San Diego. It's between 72 and 85 degrees, 360 days a year. There's like 5 days where it'll vary, right? It's always nice. It's
landlocked.
It's landlocked. Well, except for the beach on San Diego. But there isn't like room it can grow out in any direction. It's pretty like compound. So there's like a supply and demand issue. There's a lot to do there. There's a lot of industry. It has a major airport. There's probably never going to be a time where people don't want to live there. Mm-hmm. Right. And as a result, people will come with money and eventually invest there. Same with like Hawaii. I remember when Brandon Turner bought his place out in Maui, he talked about this back when he was on Bigger Pockets. And he really struggled with it because it was such an expensive thing. And as someone pointed out to him, he's like, people are never going to not want to live in Hawaii.
Yep.
So
And he was able to
probably
house
go
hack
up.
his place.
I know, right?
And he sold it to Cam just recently and made over 7 figures.
Did he really? I didn't know that.
Yep. Cam said that on their pod, so I feel okay disclosing it.
Oh, really?
Audience. Yeah.
Oh, nice. But yeah, so like, if you're looking over like the course of your life, that probably will make sense, but you will probably eat your lunch the entire time that you own it because you're going to make zero income off of it. Anything that comes up as like an expense will come out of your pocket, right? But if you look at like, it takes $200,000 to buy it, and it's worth 800 grand now, and then it's going to be worth $2 million in 30 years. That's a huge growth that you just had versus if you buy $200,000, use that to buy like 5 houses that are worth, say, 200 grand each. So it's $1 million worth. And those properties go to realistically like 100, like 1.4, 1.5 million. Same period of time, probably less. Yeah. You're going to have so much less growth on that. But also probably having more problems because you're going to have more doors, right? In a lower quality market with probably lower quality materials, worse weather. That's another thing people that I don't think take into account too, is they'll look at some of these cash flow markets where it snows and you have like floods and you have other stuff that happens versus like the warm weather markets where that just doesn't.
Yeah. And depending on the CapEx, like if you buy these and they're already 1950s or older homes and you need to put every 15, 20 years, you're putting 10 to 20, 30 grand in these places. Like, it's really hard to make that back over the lifetime. Now, it's nice when you're 20 years down the road and you're like, oh, my mortgage is only 25 grand left and I have all this equity. But over time, you really you just paid for the equity out of your own pocket over that duration of time.
Totally. Yeah. So it's funny. Do you know? Well, you probably don't because you live in one of these markets. So over here, I know quite a few people that have gotten into real estate and then they look at places like the Midwest, different Midwest market, and they decide that they're going to start building a portfolio over there. And I have yet to meet someone that was actually happy with that decision.
I mean, yeah, I know. I will say this as a wholesaler in this market. I know some of these California people, and I see what they buy at. Pick California, New York, Florida. It doesn't really matter, and not all of them stick around for a long time.
No way, dude. Not even sort of. One of our like the biggest flippers in Spokane, he decided he wanted to start accumulating a portfolio. And here's what's silly is he could like buy stuff here, but wasn't going to cash flow. And he had been sold by people in the collective genius group that he was in that you have to have cash flow because all those people are all over, but it doesn't really exist up here. And so we started buying all these like $50,000 houses in like Dayton and these other markets in Ohio, right? He's not trying to fire sale all of them because sure, he goes in and it's $50,000 house and it rents for $1,500 a month, allegedly, but it turns over every quarter. It's always trashed. There's always issues with it. The quality of the build is so poor that there's stuff that just like falls apart. And he's just rapidly trying to get out of everything. And he's now actually in the process of doing build to rents here in Spokane that will cash flow zero. But at least it'll be a concrete asset that he knows somebody will want to buy.
And someone will pay down his head if he keeps them.
Correct.
Right.
Yeah.
And there's there's a perfect example of this is there's a guy I know who bought a 100-unit apartment complex. It was like 6 total buildings, but they're all together in a C area of Cincinnati that's here. But the guy that he bought it from was an out-of-state investor, and he had third-party property management that was supposed to be local. It was 40% occupied when he got 1-year contract. He had in his due diligence period, which was about 60 days, that he could try to lease it up during the due diligence period so that way time's closed, NOI is a lot better, etc. Genius part in his. He had it 90% filled, occupied at the time that closing happened, just because he's boots on the ground and he was able to like basically hustle his way to get these things leased up. That third-party manager cost the seller millions of dollars.
Isn't that crazy? That's so unbelievable, dude. But like that's so common though.
Yeah,
like,
and they have no way to verify that the work that they're doing is being done correctly or at all.
Yeah, I mean, we've bought houses in our wholesale business from people that were out of the area that were like literally that we would have one conversation with them. They would say, "Just talk to property manager," and then the property manager has something in their property management agreement that says that they're a real estate agent. And so if the property sells, that they get to represent the seller and all sort of bullshit. And we would go through and they wouldn't actually guide the seller on the value of the property. because we would basically make our offer that's at 70 cents in the dollar, and they would accept it. And the property manager just goes through with the transaction, and the property is like turnkey. We literally had one back in 21. The guy lived in Japan. He wasn't like in the military. He was just from here, had moved to Japan. And so like all of our calls were always at like 11 o'clock at night, or, stuff would come back at weird hours. And he just wanted us to work the property manager on it. So this house at the time was worth like $250, pretty much turnkey, had a long-term tenant in it. We offered $165. He's like, yeah, whatever. Go walk my property manager. I want to know what the condition is. So we walked around with the property manager, like Dan actually did the walkthrough. Property manager talks about all the problems with the house.
Oh God.
He's telling the guy about the rain gutters that are leaking, all sorts of things. Then we go inside the house, and the tenant, who's a single guy, sort of just like a talk at you sort of person. He's like, oh man, let me tell you how much of a piece of shit this house is. And he like goes and tosses all the stuff.
Those are your favorite.
And so we use this as leverage, and we go back and we say, well, here's what your property manager says. Here's the pictures. Here's what the tenant said. We'll buy it for $165, but these are the problems that exist, just so you know. He's like, cool, let's take it. We closed on the house. Property manager got us 3%. Literally, we're doing our walkthrough again after we bought it. We're going to fix some stuff up. And the tenant's like, oh, did you guys end up buying this house? And we were like, yeah. He's like, oh, well, I told that property manager I wanted to buy it before you guys. He's like, what do you want for it? And we're like, I don't know, like $250. And he's like, done. The tenant went and got pre-approved for a mortgage. The next day, we sold it to him 4 weeks later for $250.
I love that story.
It's so dumb.
I love that story.
So stupid. Like I actually like felt bad about that one, because the guy, he was put together, the tenant was, and the property manager just completely fucked the seller on this whole thing.
This is the third part. And then people always ask me for property manager recommendations, and I'm so hesitant to give anyone's name, because they're never going to care for your place like you care for your own. Like, no, that's a perfect example.
Or your investment too. And like the whole thing with this property manager is like, he was the worst property manager. Like if you were to like have a lineup of random people and you knew nothing about any of them, and all it said was, who do you think is the worst property manager of these? He's the guy you would point to, right? He was old, sloppy, like he had no actual skills or personal skills or anything. Yeah. Like I'm guessing that he probably collected rent like with cash, and then sometimes remembered to send it to the owner, probably forgot how it was such a joke, dude. Yeah. But that was the guy had been using it for 20 years. And so that's what he did. For
anyone that uses third-party management, and you could put in your agreement a lot of times, if any repairs like over a set dollar amount, call it $500, that it needs your approval to be fixed first. Where a lot of the property manager will get you is it'll be like, I'm going to go replace an air filter, and they'll charge you $200 to do it. Yeah. Or like, so it's on the rehab side that they'll try to make a lot of their money, not on the leasing or continuing maintenance side. We had a 4-unit that was out of state seller, same kind of thing, walked through the property manager, and it was not a great part of town, but all 4 units were recently done. All the utilities and like mechanicals were new. And their in-place rents were like $3,500, maybe $3,400. And we bought it. This was her number, by the way. I didn't even start, for $205. I didn't even negotiate. I said, yeah, I'll buy it. And then I think 2 years later, we collected rents. I sold it for $347K, and I put $0 in this place.
That's crazy.
Like,
yeah, God.
But those are our opportunities too. Like, I do you feel bad about it? No, but I don't know.
I would say, if anything, it makes you super cautious, right? Like when you start to own stuff yourself, that is the main benefit. It's like if you're like a hiker and you hear that like someone got attacked by a bear on a trail that you're going to, you're going to be extra cautious on that trail.
Sure.
Even though like you're probably not going to have a problem, it will make you be more cued into things. It's the same sort of concept, right? Like if you see the things that can go wrong with your properties, with the property manager, with the teams that are involved, you're going to have a different level of due diligence when you approach them going forwards.
Or just stick to wholesaling and flipping and don't own rentals. This is a separate business. It's a whole separate thing.
I know. Like, that's the other thing too, is we can't emphasize that enough. And I've tried to talk to people about that so many times. It's funny. We like with our, Sir Lenzo out with our lending company, we get quite a few people that come and like invest with us that are like, what's a very common situation is they're a high income earner, doctor, whatever. They listen to the show. We know them from a different group, and they say, hey, I want to get into doing what you do. And I'm like, you're a physician. you don't want to buy crack houses. Like, trust me, just go be a physician and make $700,000 a year. Like, oh, but like, I think it would be fun. Like, I want to invest more. What else or stuff? I'm like, invest in debt, invest in like LPs, invest in that, $1.2 million beach home in San Diego, right? Like do those things. Those will be a much better outcome with way less headache than trying to get into fixing up renos, the buying like a
they
big,
could literally go pick up
portfolio.
overtime and make an extra $100,000 a year for very little like things versus trying to buy a $70,000 crack house in Springfield, Ohio.
I know, but they always want to do it. I don't know what that is.
I think a lot of it, they get sold on the depreciation of how to lower their taxable income from like being a high W-2 earner, which I can understand. You're probably paying 40%, in total for some of your taxes. If you're
about to be paying 80% when you have your depreciation, and now you need to rebuild the house every 2 years because it freaking floods, and you have people selling meth out of there. But I don't know, man. It's that is always a big red flag when people try to sell an investment with the tax benefits being on it. But if you're in that position though, where you can afford to buy higher quality stuff, you should just do it, and don't get into the fixer upper game unless you want to do it actively as a business. Even like people that I meet that are like, I want to flip like 1 or 2 houses a year. I'm always like, you probably shouldn't do that, just because you will eventually lose. And the problem is, if you lose on your one house for the year, that's a pretty big loss for the year.
Yep.
Like if
I'm going to lose $40,000 on a flip that we're losing coming up. And like, does it suck? Yes. Yeah. But like, if I was new, I'd be in trouble. But like, luckily I'm okay now. Right?
Well, and also that's just like a line item for you. That is amongst the 50 other deals that you've done that are profitable. So it doesn't really matter. But I don't know. As people do, I would just say that when you're looking at locations on stuff, if you are looking to go virtual with it, just make sure that it actually aligns what you're trying to do. And if you're already wealthy or do well for yourself, you don't need to go to some of these like shitbox markets. Also, too, I would say that if you already do well for yourself, you don't need to chase like home runs.
Yeah.
Over the course of a lifetime, the base hits are what builds like very long lasting guaranteed wealth. And I don't even think we're a lifetime. We're like 10 years, honestly. We've been in this game long enough that there's guys that I would say are very wise and patient. I consider use one of these, Dylan. I consider Drew Wired, who's on the show last week, one of those people that have kind of like stuck to their guns and they've built a strong foundation. And now you guys are crushing it, right? Like you have an awesome balance sheet, you make a lot of money, you do well. Most of the guys that I know that have just been constantly chasing the next like big home run, the big thing, they're all screwed. They have made nothing, or if anything, they're in a massive deficit from where they were 5 years ago.
Yeah. I mean, imagine you accumulated a couple $100,000 over the past 3 or 4 years building this business. You make one decision that wiped out 3 to 4 years of work.
Right. And that can happen.
That no one obviously is going to talk about that. But you and I both know people that's happened to, especially being like abundance in these circles. Like it happens. It's just not advertised.
Yeah. And the thing is too, is especially if you're buying real estate, understand that you do not have gains until you sell.
Yep.
Right. And there's so many people that are still in denial of what their portfolios are actually worth. There was I don't know if we talked about this on here, or if it was just between us, but there was a guy that presented at a Go Abundance call that he had like a $15 million net worth. I was thinking, and it just like kind of didn't seem right. And one of the guys in my pod, he went and like basically back checked this dude's numbers, looking at the average cap rates of this market. And honestly, like just being super honest, instead of a $15 million net worth, he probably had a negative $150,000 net worth when you reanalyze things at the actual cap rates versus what he said they were in his presentation.
Yep. Well, and realistically, anybody who's in real estate, if you take, and there's nothing wrong with, I do this, full disclosure, but if you take ARV minus your debt, right? Let's say you have $1 million in ARV and $500,000, you have $5,000 on equity that you can count towards your personal financial statement. In reality, that's closer to 400 just from sell cost alone.
And it's not including your cap gains.
Yeah, exactly.
Which are going to be significant. It's not going to include your depreciation recapture, which if you've taken any is more than you would expect.
Yep.
Right. So all of a sudden that $500,000 in equity is actually only $200,000.
Right.
Right.
And so like, but from a balance sheet standpoint, no one, like if you're presenting to a bank, no one actually does the math on the cap gains, the recapture, but you have to be aware that that is a thing if you're making decisions to sell or not sell or to keep, et cetera.
Yeah. I would say that concept alone is why the value of getting additional leverage is such a huge talking point with like the OGs of real estate, the Kiyosaki's and those sort of people, is because they fully recognize that if they were to sell their assets with how many little threads they've pulled and not pay taxes, they'd be completely screwed and they would probably lose their ass.
Yeah. I mean, I know we're running out of time here too, but there's a seller that I want to buy one of his buildings, but he started with he's 70 years old. He started with single families. He 1031 all the way up to this like 50,000 square foot strip mall that's in a good part of town. He literally, like, you'd think it's paid off. You would think that he has all this equity and stuff, but because he's 1031 so much, he basically has nothing. Yeah. He basically has nothing. So he's like, I literally have to die with this asset. Like,
oh my God.
But it happens.
And this is why you end up with like dilapidated like triple nets and stuff in some of these places, because people can't sell them. If they were to sell the property that they've done that over their entire life, now they're 80 years old, someone's going to have to pay those taxes, and they probably don't have $3.5 million.
So his kids get like a step up basis, or don't get. Yeah, like it's wild. I tried to go through like all these sophisticated. I think there's deletory's something statutory trust. It was like a DS, but I tried everything I could, and our accountants and attorneys are basically like, this guy screwed, and he knows he's screwed.
Yeah, it's a Delaware statutory trust.
Thank you.
But anyways, all right. Well, good chat, Dylan. I appreciate that. Well, thanks for listening, everybody. I started putting together a little newsletter. If you guys want to see some more information on like the different little headline stuff we talk about in here, you can get that collectingkeys.com/newsletter. Go grab that. Just ask for your email. You'll get an email from me weekly, same day as the show comes out. Be a good little, like, what do they call it? Like a companion for the podcast. I think that's what they call it on like TV shows when they have like, oh, you want to watch the Game of Thrones companion podcast. But yeah, collectingkeys.com/newsletter. I'll send some out there so you can follow along a little bit better. Thanks for listening, everybody, and we'll talk to you guys next week.
See ya.